Hi, everyone. Welcome. Whilst we let everyone in, I'm just going to start by saying thank you so much for joining us today. We're really happy to have you. We are going to be doing a poll whilst everyone comes through. We want to ask, you should be able to see it now. Do you have already a business in the UAE, or are you thinking of starting one? Let us know in the chat box below in the poll section. Also, feel free to let us know where are you tuning in from? Where are you around the world? It'd be great to know. So without further ado, I think we might just start the webinar. So today we're going to be doing the UAEvolution from cracking the market to navigating tax and compliance in 2026. I am really happy to present you our two amazing speakers today. We have Elena Flores, who is our Global Chief Operating Officer here at Awesome. And we also have Shahala Mohammed Ali, who is our Senior Accountant in the UAE. I don't know if you guys want to do a little introduction about each of you.
Absolutely. Thank you, Nuria. And thank you, everyone, for joining today. As Nuria was mentioning, I head the global operations here in Awesome. I've been working in Awesome actually for almost 7 years. And I'm super glad to be speaking here because me personally, I moved into the UAE. I moved to the UAE 3 years ago. And I have experienced myself, not only through Awesome, but also through being close to the entrepreneur community, all the evolution of this market. So besides my personal decisions to move here, because UAE is not only a great place to do business, but also a great place to live, where I live with my family. I'm super honored to be, bringing to you the things that I have learned since I moved here, and speaking alongside my colleague Shala, that she's actually born and raised in the UAE, so has a lot more experience than me. But yeah, I will talk a little bit more later, and thank you all for being here today.
Yeah, hi guys. So I'm Shahla Muhammad Ali. I'm the senior accountant in Awesome. So it's very grateful to be part of such a beautiful and informative webinar. So we'll be going ahead with basic accounting concepts and how we'll be taking over it to tax compliance matters. And we'll be addressing a few questions from your side as well. So yeah, let's do this.
Amazing. Thank you so much. Okay, so, I think we're going to make this bigger. If we go through the agenda, you'll see we have quite a few things to cover today. We're going to be talking about the UAE shift from tax-free to transparent hub. We're going to be talking about the mystifying corporate tax, dual jurisdictions and transfer pricing, support for UAE businesses, and the cost of getting it wrong. So without further ado, I'll leave it with you, Elena.
Thank you, Nuria. So I'm seeing actually the answers from the poll. 75% of the people have already a company incorporated. That means that it's not most likely maybe the first time that you go through all the compliance regulation, but for the ones that have had it actually since long years, some years ago, as I was saying before, the market and the country has changed a lot, right? So what I want to make clear in here is that it's clear for everyone that the UAE is not the tax haven zero corporate tax that it used to be, but this is for the good, right? Like the UAE has transitioned from zero tax specifically to be part of this global business hub, to gain the confidence of the worldwide global market and align also with the OECD global standards. That does not mean the UAE is not a place where to locate your business anymore. It's just that it has tightened a little bit the compliance regulations in order to actually, as I was saying, play on the first league of all the global businesses, right? But that means that now the UAE is recognized worldwide. It provides the transparency and the governance that international investors actually require. And doing so, it's still one of the best places in the world, tax-wise, where to place your business. That's important, but not only, I want to focus on the UAE, not only because it's a place where taxes are actually not that high, also because it's where the government actually is showing with all the regulation, all the policies, that it's a best place to be right now. It's actually ranked #1 of government AI readiness. They're investing a lot of efforts, money, and putting a lot of, focus on making sure not only the businesses are adopting the AI and the new technologies, but also the government itself, right? It's one of the, I mean, there are different rankings all around the world, but it's always one of the top 5 in world competitiveness. And this keeps growing, right? Like the UAE, it's really different from what it was 10 years ago. And it's not that it has been like this forever, but it shows that actually the country is improving year over year. And we see it also with a number of businesses that are opening in here, that foreign direct investment. Yes, there are some questions after with questioning about what's the current situation of everything that is happening worldwide. I will explain a little bit more later, but still today, even March, April, there are a lot of new businesses being opened in Dubai and UAE in general, and the government keeps investing on it because the framework and the reason why so many people put their companies in here, this has not changed, and we'll try to give a little bit more of visibility later on. Yeah, I pass the word to you, Shala.
Thanks, Helena. Yeah, that was a great overview of why businesses are choosing UAE now. So yes, so now we have set the context. Now let's understand all this from a tax perspective, from why, like we have corporate tax, we have VAT, how this all applies to UAE, everything we can discuss over here. So the UAE introduced the corporate tax regime of 9% in 2023, which is still one of the most competitive globally. So, but where things get interesting is how the same corporate tax applies separately to free zone companies as well as to mainland companies. So this is one of the major confusions. This is one of the major questions we get from our clients. What is the difference between how corporate tax applies differently to mainland and free zone companies? So let me simplify this with a simple analogy. So we have a mall analogy. We can consider UAE as a large high-end shopping mall, which is having, so if you're opening the mainland company, it is like as if you're opening a company in the main mall corridors, and you are having access to the entire market. You're having access to any consumers, any businesses, even government entities. And since you have access to all the market, you're supposed to pay a 9% corporate tax on your taxable income above 375,000 dirhams. So this is with the mainland company. But let's see now what means to be like having a free zone company. So let's imagine in the same mall, we are having exclusive duty-free boutiques. Those are the free zones because you don't have to pay you don't have to pay any duty, or you don't have to pay any tax in here, considering you align with certain conditions, you meet certain conditions which are known as the qualifying free zone persons. So if you're operating in a free zone company and you are having this qualifying free zone power, then you will be able to enjoy a 0% corporate tax on your entire income. You don't have to pay a single penny for corporate tax to the government, but we have to make sure we meet certain conditions. So what are these conditions? That is the next question we get. So the key concept here is qualifying income. So if you're a free zone company, you are you're providing some kind of services, you're providing any kind of, doing any kind of management activities or anything, and it's within the designated zone, it will be good to go. You will be good to go with the 0% corporate tax rate, and you will be qualified as the qualifying free zone person. So that becomes qualifying income, and you will be enabled for this particular regime. But at the same time, you step outside of the scope, and then you are going to make your sale or service to any mainland company or any kind of customers or businesses outside the scope. That that portion will be considered as your non-qualifying income, and that portion will be taxed at 9%. And moving forward, if this is not controlled properly, this will altogether affect your 0% regime as a whole, because you have to make sure that you only transact in qualifying income when you are in the QFZP position. Because moving forward, if we don't follow this, this will result in losing your QFZP status as a whole. So that's the non-qualifying income and qualifying income. Then another concept what we need to study here is this is we just have summarized the qualifying income, non-qualifying income, exactly what I have mentioned here. So the next portion, what we'll have to check is the economic substance. Another thing what we need to study here is the economic substance, understanding the economic substance, because in the UAE, the authorities want to make sure that the companies are having real commercial presence in the UAE. They're having adequate substance in the UAE. In the sense, you should be having real, genuine business activity in the UAE. It doesn't mean you have to just open a business and then just go away and just start doing activities from outside the country. That doesn't make sure that you are having adequate substance. So if you're not having adequate substance, and if you're not doing your economic substance regulations filing on a yearly basis to the Federal Tax Authority, again, you will be under this, again, you will be taken out of the qualifying free zone persons. So these are the things that need to be, we have to make sure we follow closely in order to make sure we continue with the QFZP status, and to make sure that you are having the 0% corporate tax rate. And so that is why we need to categorize the transactions, why we need to maintain proper accounting records to make sure that we are having compliant, up-to-date records, and then we have something as a proof to the Federal Tax Authority showing that these are the transactions we have in the business, and we are ready to have any kind of proofs to be submitted. So that is why having proper categorization between qualifying income and non-qualifying income is important to make sure, because this totally affects whether you're paying 0% corporate tax rate or 9% corporate tax rate. So yes. And the next thing, obviously, we are all aware of it, because VAT have been in UAE for almost, like, it was introduced in 2018. So the standard value-added taxes is already active in the UAE from then on. It's a standard 5% rate on the goods and services in UAE, and VAT registration is not mandatory unless you cross the particular threshold of 375,000, and you are having the option to do a voluntary VAT registration once you cross the 187,500 threshold as well. So it's up to the businesses. So the voluntary is voluntary, but mandatory means if you're not complying with the mandatory threshold, you will be penalized for about 10,000 dirhams for late registration. So this is the mostly the UAE side of things, pretty straightforward on its own. They have their own regulations, but when things get interesting is when we start operating across various countries. So that's the next section what we'll be discussing about, that is dual jurisdictions and transfer pricing. So yes. So now we can see many businesses in the UAE are not operating in the UAE, just UAE anymore, because they are having their parent company in Singapore. They might be having their investors from Europe, or they might be having their tech or operations team from India. So while this structure brings flexibility, brings growth opportunities, it also creates compliance responsibilities across multiple jurisdictions. So this needs to be taken care about. So what we need to do here in order to make sure that we are staying compliant through all these processes, because one common misconception businesses have here is that they can simply do an internal invoicing between their related parties and then make sure that their profit shifting is aligned. That is a very wrong concept. For example, I can explain this. For instance, we have a UAE company, and that UAE company is invoicing its UK entity large amount of consulting fee or management fee just to reduce taxable profits in this country. But this is exactly where transfer pricing comes into play, because transfer pricing is very important in the UAE. It's very relevant to the tax authorities because they are paying closer attention to this. Because transfer pricing simply means it refers to the whenever there is a transaction between related parties, it should be the pricing should be at arm's length price. So what is this arm's length price? Arm's length price means the pricing should be exactly justified, as if whenever you're transacting with a related party, that the pricing should be confirmed, or the pricing should be arrived in such a way it would have been if that party was completely unrelated to you. So I should be agreeing to price my related party a price that I will be providing to a completely unrelated party of mine. So that is the simple logic of this arm's length principle. Whatever is prevailing in the market, that pricing should be enabled even to your related parties, and there is no confusions or no discussion over there, because tax authorities wants to make sure that there is no illegal profit shifting between jurisdictions. So that is what we call as this transfer pricing and transfer pricing issues. So now, how can we make sure that this particular we have this particular things to make sure that we are complying with all these transfer pricing regulations? What businesses need to make sure is they're having this. I have discussed this already. We have to make sure that the companies are having real commercial presence in the UAE. So it depends upon your business. It depends upon your business whether your business is having management presence in the UAE, or if it is employees, or if it is even operational activity, major decision making, everything is done in the UAE. You can prove to the government that you're having adequate substance in the UAE, and this is particularly relevant for IP business, holding business, or even service centers and all. So that is why having the right compliance and having the right accounting support for you, in order to make sure that your business scales internationally but with on the right way. So that is exactly why we are here with you. We Awesome can provide you with compliant solutions for all your business, and we'll be there to make sure that you are guided throughout all your complexities, even throughout your even international for your international businesses. So yes, so that is my sections. So I'll be handing over to you, Helena.
Thank you, Shala. Actually, this section is quite short, but I would actually also like to inform you that even with all these regulation and compliance requirements, the government keeps investing a lot on giving support on different industries, and giving support for people that want to relocate their teams here, the business here, expand. I've seen there's some people here attending that are not in the UAE, are from Singapore. So I'm curious about do you want to expand your business that is currently Southeast Asia into here? There's plenty of opportunities. We will actually share a more detailed document for all the attendees today. But there's a little bit of summary in here, right? On all these compliance requirements that Shala was explaining, the government is also aware of that, and they have also launched since a long time ago small business relief. That means that these compliance regulations for really small businesses get a little bit simplified. So that means that your tax reporting, simplified bookkeeping, it's available for all these businesses. You still need to apply for it, but that's important. That's why it's important that you actually put your hands on some trusted corporate service providers and can guide you through it. But also, as I was sharing before, right, there's Hub 71, for example, to help tech startups to actually relocate or expand into this into the UAE and the Gulf countries in general. And then this Dubai Economic Support for 2026 has also been put in there after after the regional conflict has arisen, because the industries that have been suffering the most is the hospitality, trade and licensing. So it's like also F&B, tourism, and so on, right? So this to show, I have more on the next slide, but I don't want now to focus on that, and I want to focus more specifically on how we can support you. We have a little bit more questions, but also on the next step on, okay, now I have a company. As I was sharing before, most of you here already have a business. So how do you keep yourself compliant? Meanwhile, also you are aware that there are so many different options that the government is supporting all of you, and we would be also keen to focus on your specific reality, the industry that you are in, or the needs that you have for your business. Is cash flow, is the access to investment, it's growth, right? Like there are different programs for different needs that you might have as a business. That's all from here. And yeah, now I give it back to Shala. So she focuses more on making you aware how important it is to keep your company compliant at all times.
Thank you, Helena. So yes, over to my last section. So here, what we'll be discussing is what most businesses need to or want to avoid. Simply penalties, or even some kind of compliance risks, or even some kind of poor documentation. All these are the late registrations. All these are the things that lead to penalties. So you can see a poll that is live for you. So have you ever missed or nearly missed a compliance deadline or been surprised by a tax bill? So you can just give your answers over there so we can get an overview of a way or our attendees stand in terms of penalties and compliance matters. So yes, so I can see already 50% are not sure. I don't fully understand my tax bills. And 25% yes, and it was stressful. And 25% not yet, fingers crossed. Okay, so we are having this particular general overview. So from this point of view, how can I get it? How can I make sure we stay compliant throughout the journey? So you can see on the screen, most areas where the businesses get penalized for is mainly due to late registrations and poor bookkeeping or missing documentations. All this straight lead to particular and different penalties. And you might already know UAE is not very easy with penalties, and even with waiver consideration request, even if you're going to submit any waiver considerations, it's not easy to get a waiver for your penalties. So if you have an administrative penalty on your FTA account, it is something you'll have to pay 98% for sure. So the main thing what we can do is to make sure that we don't fall for such traps. So most of the cases, the company, we see our founders, even our clients before coming to us, and they're getting hit with almost 10,000 dirhams penalty simply for registering their corporate tax or their VAT late. So making sure that your company or your startup follows the particular deadlines, and making sure you are registered on time. And even many founders or many startup owners, they think once they are registered or once they are the very first step is done, they think that their compliance is over. No, you have to make sure that the return filings are done, the VAT return filings or even the corporate tax return filings, and even you have to make sure your licenses or even other kinds of KYC documents are updated on your FTA account. So that doesn't have a penalty as of now, but moving forward, these all will be stringent policies as per the FTA, and it will all result in penalties with you. So that is why making sure that you have a right accounting support like Awesome, in order to make sure that your company grows and your company is always compliant, staying compliant throughout the journey. So now I want to tie this back to e-invoicing, because we'll not be going on a detailed basis today, because we'll be having a separate session completely dedicated to e-invoicing webinar. And let us know in your comments also who would be who would be interested in joining our e-invoicing webinar, so that we'll be sending out the links directly to you once our webinar is set up. So e-invoicing, as many of you might have already know, this year e-invoicing has been released by the Federal Tax Authority, and they're having different separate phases as of now. So for large companies, for small companies, even for government entities, we have separate deadlines to be followed. So as of now, no penalties, no compliance risks has been announced for these. But moving forward in 2027, if you don't follow the e-invoicing guidelines, that might even result in operational freezes for your company. So as all rules and regulations FTA deploy, they on the first stage it might be voluntary, but later on it becomes mandatory, and then if you don't follow it, again you are fined for it. So making sure you have the right partner with you is something that we can do, and to make sure that we support your business throughout the process, and making sure that you stay compliant throughout. So yes, that's the we move on to the key takeaway session that will be done by Helena. Thank you.
Yeah. Thank you, Shala. So just a quick recap, because we have been talking a lot and might be a lot of information that you are so focused on building and growing your business, but the most important thing that you should be aware of. The UAE transition to a 9% corporate tax and tightening the compliance regulation and requirements. So please make sure that you are always on top of what is required from you. Non-compliance leads to penalties, and what you might be, saving on taxes, you might be ending up paying it on penalties, and we don't want this for you. Cross-border operations must adhere to transfer pricing. If you feel that you are on that situation, please contact us, or just put yourself on someone that can guide you through this, because this is important also to make it right in order not to receive also penalties and not to be in a position of not compliant. Said that, as I was sharing before, there are multiple government grant support initiatives. The UAE is actually actively investing on, companies to build their dreams here, to bring their companies here, to expand into this region. So look for it, because there are plenty of them and could really help to grow your business. And the fifth one, it's obviously, I come from us and I've been doing this for so many years, as I was saying before. And I'm glad to say that we have been helping so many companies in Singapore. And at the moment that we move here into the UAE, we want the same thing, to be there for the founder community in this market, because we've seen that there's so many things to take care of. And most of companies, I must say, still kind of are building their business with the back office of accounting the old way, right? With a software that they do not control, not having visibility of their businesses, just sending the invoices through mail to an accountant who does not know where they are based, never got in touch with them. And this is not the way that you should be treating your business in 2026, with so many good tools to help you stay compliant, to help you have information about your company. So make sure that you actually choose the best possible option for your business. I really feel like entrepreneurs, all of you are actually heroes of the world. Like, it takes a lot of guts to start and create your own thing. So you should be focusing on that and not to be worried about if you're meeting compliance or not. Nowadays, it's not even as expensive as it was lots of years ago to have a really good advisor next to you. And this is actually what we're trying to build, right? Like what we're building and with what we are offering to all of our founders community. So please, the automation, the routine admin gone of your day-to-day. If you would count how much it costs you to manage those things on your own, it would be a lot more expensive if you could put this amount of time on growing your business. Stay always on track of your compliance. I saw also some question that said, I do not know. You should know, and you should have a tool that makes you aware of that, right? It should be crystal clear. The regulations might be a lot, but they're always the same. And even if they change, the service provider should always be on top on letting you know what is required from you, right? And as I was saying, like, there's really good ways to keep track of all those things in a seamless way, and let the expert also to be ready for helping you with the strategy. So you will have the QR code after this slide for whoever wants to do a free consultations to us. As I was saying before, there's a lot of information. That's why We are happy to bring all of you together today so we can explain in a really simplified way all the things that you should take care of. But we have been offering free consultations after the conflict in the year, and we want to keep doing that for all the community in the UAE. So feel free to contact us. We have a dedicated onboarding crew. We have actually really smooth migration due to downtime. We have a system already that it's ready for invoicing. We can get you up to speed on all the compliance regulation and have always someone on your back so you can focus and stay on your growth. This is a QR code that I was talking about, so please take a screenshot. You will anyway receive it from us, but we don't want, I mean, we just want to help you. So if the free consultation helps you to have a better overview of the next steps you need to take and how to run your business more effectively, what we want to is to be there for you so you can keep growing your business and make the UAE even greater of what it is today, because we all keep believing in this market. Thank you so much, all of you. I think we have some questions, right, Nuria?
Yes, thank you, Elena and Shahala. So yeah, before everyone drops off, we are going to be doing a quick Q&A session in case everyone has any questions. If you check below, you can see the questions box. Feel free to send any questions you might have right now. We also have some that have been previously submitted to us, so we can start with those. They might cover what you are already wondering. And if you need to leave, just a reminder that we will be uploading this webinar on our YouTube channel, and we'll be emailing to you the full recording as well, so don't worry. And also, again, before we go ahead with the Q&A, feel free to follow us on social media. We're always posting small business advice, especially for founders. And do reach out to our team if your question doesn't get answered or you'd like to have a more private consultation. Feel free to book a free consultation call with us. So let me start with one of the questions we've got ready. So someone asked, I run an early stage free zone entity. If I accidentally breach the qualifying income scope, say by making a direct sale to a consumer on the UAE mainland, does my entire revenue become taxable at 9% or just that specific mainland transaction? Helena, I think you might be the best to answer this.
I might take it.
Okay.
Yeah. Generally speaking, whenever you have the qualifying free zone status, you are allowed to you're allowed to generate non-qualifying income up to a particular threshold. So once we call this a de minimis threshold. So there is a particular calculation or assessment for the particular de minimis threshold. It depends upon business to business. So once that de minimis threshold is crossed, then it will be affecting your entire 0% regime altogether. So generally, basically, first what they will be doing is if you are going to breach the particular threshold, that particular income will be just taxed at 9%, and the rest will be the same 0%. But moving forward, this is not controlled or this is not categorized properly. This will entirely affect your whole 0% regime altogether, and you will be taken out of the scope as a whole. So this is something we make sure that we follow the QFZP state. Once we're having the QFZP status, we follow all the revenue transactions categorizations properly in order to make sure we maintain the status.
Amazing. Thank you, Shahala. Let me see. Okay, we're going to go ahead with this question. If my business qualifies for SPR, do I still need to go through the complex process of registering for corporate tax and filing annually, or are we completely exempt from the paperwork?
Yeah. So small business relief is just a particular election that you do at the time of corporate tax return. So even if your company is having the 3 million threshold, less than 3 million dirhams, your company is having this revenue less than it, even then you will be eligible for SBR. But that doesn't make you outside of the scope in order to do corporate tax registration or corporate tax return filing. Even if you are eligible for SBR, you have to go through entire processes, but just that it will be simplified returns for you. For other companies who are having many greater revenue, larger revenue, they'll be required to do complex tax calculations and stuff. But for SBR, we have simplified return. That's the main thing. So but that doesn't make you outside of doing corporate tax registration or any other compliances. So yeah.
Awesome. Okay, moving on to the next one. Given the current regional volatility and war climate, would you still consider UAE as the top 5 global business hub? Are you seeing international investors pull back, or is the government doing enough to attract investors and new businesses? I don't know who'd like to answer this.
Yeah, thank you, Nuria, and thank you for that question, because it's something actually we've been asked a lot, right? On the first question, yes, I would still consider UAE as a top 5 global business. Why? Because most of our clients and the investors and the founders that come and build things here, they are building global businesses, right? It's true that this war climate has impacted some industries like F&B, tourism, and so on, but this is not the type of businesses that we have been working on: digital business, founders, freelancers, and so on. So all the reasons why all these founders have moved into the region or brought their businesses in here, this has not changed, right? It's a market that it's really good tax-wise. It's a market that it's really dynamic. It's a market that you will find a lot of investors, and it is still a big market that keeps growing, right? Another thing is that, yes, it has affected, as I was saying before, certain industries, and it has affected some people that maybe were considering to relocate all their families here, and because of this situation and the media and so on, are kind of maybe holding on this decision, right? I see, for example, some of the people that I was saying before from Singapore. If you are planning to expand your business in here, it is still a good move, right? Like, but it depends on when actually people want to bring their business in the UAE or they want to build a global business. We always ask, what is your main goal? What do you want? Like, based on that, you will actually, within all the options that people might have, decide if the UAE is still the place to go, or maybe it's Singapore, it's Hong Kong. It's like the global businesses hub in the UAE has not changed on the good things that it gives to global entrepreneurs, right? And I really feel and know that the government is doing a lot to attract investors, right? But not only after the war, even before. The things that this country has achieved in a really small amount of time, it's really impressive. And it gives you, that the feeling, that the perception, not only, as I was saying, because of the war, that the government is here to support businesses and to make this the best country where to start a business.
Awesome, thank you. Okay, this is the last question we have from the ones submitted. If you still have any questions, send them in the questions box below. I think we are starting to get some extra questions, but for this one, for a founder who has been doing messy manual accounting for their first year, what is the immediate step to take with an accounting partner to ensure we aren't flagged for an audit?
Book a call with an accounting partner as soon as possible. Use our free call, because you should be able to answer your compliance questions yourself, right? Like, when were you incorporated, under which free zone are you corporate tax registered? Are you exceeding your threshold of revenue for being registered for VAT? All those questions you should know to understand if you are in a good compliance situation or not. But again, putting yourself in the hands of a trusted accounting partner will help you solve this, right? And from that moment onwards, just trying to keep everything under control with a platform and with a team that gives you this trust and gives you, this trust while you keep focusing on your business, that you should not be, be worrying about those things. So go and look for someone that can give you that without you having to spend time on it.
Thank you, Elena. Okay, we've received the question here. Hi, my company registered in free zone and I don't deal with any sales. Let me share it here. I don't deal with any sales or revenues from mainland, and my revenue is under the threshold and it's from overseas salary. And just wondering aside, corporate filing, do I have to maintain booking? Is this very much mandatory? Kindly clarify. I'm not sure.
Thanks, Nuria. I'll take it. So, even if your company is under free zone, and if it is not required to do any, even if it is under SBR, record maintenance, making sure you have up-to-date records, you have invoices, you have supporting tax invoices, you have supporting bank statements, all the documents. Even sometimes you might be required to prepare audited financials as well. But considering you have lower amount of revenue, that might not be required. But making sure you have supporting for all the transactions, not just revenue, but even for expenses, is very important under corporate tax, under FTA, because FTA, even they have this penalty for retaining records for almost 5 years. There will be a penalty and another penalty. So making sure you have proper records and retaining them for at least 5 previous years is very important under the FTA. So yes, so we have to make sure that we follow this as well. I hope that answers the question. Thank you.
Thank you, Shahla. Okay, I think we might be done for today. We've gone a bit over time. Thank you so much for everyone that's joined. Again, like we already said, we will be sending this to you by email, and also we'll be posting it on our YouTube channel. So feel free to follow us on social media to keep on track with what we do, and please don't hesitate to get in touch if you need any help or just a consultation call. Our team is always here willing to help. So yeah, hope you have a lovely day wherever you are in the world, and we'll catch you in the next webinar.